Morning, good afternoon. This is Jeremy Martin coming to you live from California, sort of La Jolla, but the Institute of the Americas in California. Thank you so much for joining us. I guess good afternoon in many places where folks are dialing in today. Welcome to the Argentina Virtual Oil and Gas Roundtable. Many of you recall that we had hoped to have this event in March, and now we've been able to transition a bit and pivot, which is one of the favorite words of the year, along with You're on Mute. We're pivoting this to a virtual event, kicking off today, and tomorrow we'll have further sessions. Just a couple of quick housekeeping notes. We do have interpretation. This first panel will be in English. We'll sort of alternate between English and Spanish throughout the course of the event over the next couple of days. There is a button, I imagine most of you by now are used to the interpretation option on Zoom, but just in case, there's a button here at the bottom on the Zoom toolbar, interpretation, and we have English and Spanish, and there's a couple different ways you can do that. You go in there and choose which language you want to listen in, and then you can also mute the original language so that there's just the translated version of the discussion in the broadcast. So up to you, however you'd like to manage your participation and interpretation in that regard. We have an agenda that's spread out over 2 days. We have 4 sessions today, and we have 3 sessions tomorrow. We run through the Argentine afternoon today and the Argentine morning tomorrow. We're trying to set everything on Buenos Aires time, so the agenda all reflects Buenos Aires time. And I have posted in the chat the link to the updated agenda, as well as the bios, everything there. There's our event site with various tabs for you to be able to find that information. We're not going to have any PowerPoints. We'll run all of these panels, as most of you who've joined us before know. We'll do discussion formats. So we'll run all of these that way throughout the next couple of days. I want to especially thank our 3 sponsors, our principal sponsor, Integra Capital, and we'll hopefully see Jose Luis Manzano here in a minute. Fitch Ratings and Hartree Partners, Todd Martinez and Scott Monette, thank you all. Appreciate you and your team and all your colleagues, Severio and Lucas and every Dan and every Fitch, and then everyone, Pedro and everyone at Hartree. Thanks so much. And always have to absolutely extend our appreciation and gratitude to the Energy Steering Committee at the Institute of the Americas, Chevron, ConocoPhillips, Deloitte, Engie, ExxonMobil, Integra, InterEnergy, Man Energy Solutions, Orel Energy Group, Pan American Energy, Pluspetrol, Schlumberger, Sempra Energy, Solar Turbines, and Sproul. And we'll have a lot of folks from those companies joining us today and participating formally and as speakers and participants. I also want to thank our colleagues and partners. Just before the pandemic took over the world, we signed a memorandum of understanding between the Institute of the Americas and CEARDE, the Center for the Study of Energy Regulatory Activity at the University of Buenos Aires, and we've been delighted to have their support in various activities, the La Jolla Conference, and now today. And it's a great pleasure to have Griselda Lambertini joining us. She'll be moderating the gas panel later today. And with us right now is their president, Raul Bertero. So Raul, I just want to offer you the chance to say something, and thank you so much for everything you and Griselda and all your team have done to support this even a great partnership so far this year. Thank you. Love to say something.
Muchas gracias, Jeremy, por la presentación. Buenas tardes a todos acá desde Buenos Aires. Realmente estamos muy contentos de esta relación relativamente reciente con el Instituto de las Américas, pero profunda, donde ya hemos hecho y organizado varios eventos. Este es otro más de estos que consideramos tan importantes para una mejor comprensión de la situación de Argentina en general y el intercambio de opiniones entre la academia, la universidad, los empresarios y las realidades que tienen los países. El CEARE, una breve introducción, Centro de Estudios de la Actividad Regulatoria Energética de la Universidad de Buenos Aires, es una experiencia muy particular porque está formada no solo por 3 facultades de la Universidad de Buenos Aires, la Facultad de Ingeniería, la Facultad de Ciencias Económicas y la Facultad de Derecho, sino también por los entes reguladores, el Ente Regulador Nacional del Gas, el Ente Regulador Nacional de Electricidad y CAMESA, la compañía de despacho eléctrico. Así que es una experiencia muy interesante donde intercambiamos algunas cuestiones de lo que hace a la academia y a la investigación y recostados también sobre la parte de las políticas públicas. Así que otra vez es un honor compartir con el Instituto de las Américas este evento, ayudar a que esto se desarrolle y bueno, a partir de ahora, Jeremy, tenés la conducción.
Muchísimas gracias. Thank you so much, Raul. And as I noted, we'll alternate between English and Spanish, and absolutely no problem at all. Thank you for, again, your help. So just a quick note, and we're trying to get a couple of our other panelists joining us here. So stand by. Hopefully, Vera and Jose Luis will be able to. We'll get their Zoom account, get them logged in here. But let me just throw a couple of ideas on the table. I had been thinking a little bit about opening, and as we worked on this agenda, obviously a lot has changed since we originally developed this this event and program back in March. I don't need to reiterate or go through everything that's happened in terms of the global crisis and economic challenge and everything that we're all dealing with on a daily basis. You know, obviously the health and economic, and of course for us here today in the energy sector. But I think it's important if we step back and think about, if we add to that crisis of this 2020, the fact that Argentina entered the year already in crisis. They had just had a political transition in December. In fact, next week, President Fernandez will celebrate 1 year in office. Argentina arrived into 2020 with already having the issues of its economic downturn and debt crisis and fiscal crisis. And then obviously COVID-19 arrived. And so I think what we've also seen, not even 100 days into his administration, was an immediate and very, very strong response by the Fernandez with one of what I think is agreed upon, one of the most stringent and you know, longest for sure lockdowns to confront the virus. In fact, the lockdown that just only recently ended a few weeks ago. And it's certainly something that, again, is sort of stating the obvious, only deepened the financial and economic challenges that were facing Argentina and made the year even more complicated. And you know, on top of that, like I said, the debt issues and the negotiations with the IMF, as well as some policy measures, fiscal policy measures that were taken domestically and implemented by the government in the early part of and throughout this year. Let me wrap my opening up by saying I think there has been some good news recently, or at least some dashes of good news. The lockdown and ending the lockdown seems to have at least allowed for a little bit of return of economic activity. I think this is particularly notable in the energy sector, where it seems like some demand is recovering, but also there's been some just recently released figures about activity and drilling that seems to be showing some signs of reviving and recovery. Finally, and we'll get into this in great detail during our gas panel today, as well as our other panels, the government has taken its first significant measure with regards to energy policy and implemented the latest installment of Plan Gas. And it is underway. The subasta, the process for implementing all the details and contracts with regard to the latest installment of Plan Gas is underway. Indeed, there's a ceremony this afternoon at the Casa Rosada that our friends in the gas panel will be participating at, many of them, and we'll get a direct feedback from them this afternoon in our gas panel, just exactly what they. Before that, we'll have some thoughts, and Raul will moderate the panel a little bit more specific to Vaca Muerta and oil. So there's going to be a lot to talk about. There's a lot of challenges, and I think when we talked about this agenda, especially as the year went on, we wanted to start with a look at the macroeconomic and investment climate. And so we've gathered here what I think is a fantastic and diverse set of insights, really covering an enormous amount of background and views on not just Argentina, but global trends and regional trends. Todd Martinez is a director in Fitch Ratings Sovereigns Group. He's based in New York. Todd, thank you so much. Guido Cerini is the vice chairman for Latin America at Credit Suisse. He's also based in New York. And hopefully we'll get Vera online here. Vera de Brito de Gyarfas is a partner.
Come on, Jeremy.
Oh, sorry, I didn't. Hey, all right. Hi there, Vera. How are you? Excellent.
Good. Sorry about that.
I'm just blowing through my remarks here. There, Jose Luis is there too. Sorry, guys, I didn't see you. Welcome, welcome. Perfect. George Papar used to say, I love it when a plan comes together. Excellent. Thank you, Vera, partner at law firm Meyer Brown, based in Houston. Scott Monette is the director of hydrocarbon consulting for the Americas at Hartree Consulting. He's also based in Houston. Jose Luis Manzano is the chairman of Integra Capital. And as I think I mentioned earlier, he's part of our steering committee and most importantly, board member of the Institute of the Americas. I think he's based in Zurich, but maybe he's based on a plane is a better way to put it. Not quite sure at this point, but good to see you, Jose Luis.
I am in DC.
You're in DC, of course. The minute I say something where you're based, you're somewhere else. Perfect, great. Well, look, I'm going to stop there and invite Todd, now that we have our entire panel and we're ready to go and we're going to set the scene here with the big picture before we dial into specifically. Todd, let me throw it over to you. I think it's going to be a great way to start with the sovereign perspective, and we're always delighted Fitch does the work and the analysis. So Todd, welcome your thoughts, and then we'll have the other lists, and then we'll get to the conversation. So thank you all again. Todd?
Thanks, Jeremy. Thanks to the Institute of the Americas. And yeah, happy to kick things off. It's an honor to be here. As Jeremy said, I'm from the sovereign side, not from the corporate energy side, but I will try to touch on how energy is hugely relevant for the macro outlook. So I think this week especially is a good time to take stock of this government because it's almost exactly a year since it's been in office. And I think this time last year, on the conference circuit, there was a lot of optimism, and it's fair to say that that's really vanished. And that's also despite Argentina having finally gotten to a debt restructuring deal in September. I think the bad news there is that they got the deal, but it did not lead to the virtuous cycle of confidence and capital inflows, debt issuance that a lot of people expected. Argentina's bonds are back to trading at highly distressed levels. And it's been a similar story with our credit rating. We did upgrade Argentina out of default to CCC. And post-restructuring ratings are always low, but that's an especially low rating. By comparison, Ecuador got a higher B- rating. So obviously there's a lot of challenges captured in that. So what went wrong? I think obviously the debt deal was only one piece of a very complex puzzle. And I think the optimism has faded for two main reasons. Argentina got hit by bad luck in the form of the pandemic, but also due to some real self-inflicted policy wounds, due to erratic policies. The pandemic has been a devastating blow to an already fragile economy, and understandably, the government had to do something, and the only way it had to finance that was to turn to the central bank's printing press, and that's meant a huge expansion in the supply of pesos, which obviously poses risk to inflation, the exchange rate, and central bank reserves. And I think the market, local and international, might have been okay with that unorthodox policy strategy given the circumstances were so extraordinary. But what's really more concerning is that there's a lack of a phase-out plan on the part of the government. And I think that lack of a phase-out plan really, instead of the money printing itself, is the root of a lot of the problems we're seeing. Government, instead of sending clear signals, has reverted to a lot of heterodox measures. To deal with the currency pressures. It's resorted to capital controls, which relieve some of the pressure, but discourage the inflow of any new money. And namely into the ones like energy that stand to be the source of new hard currency inflows. It's dealt with inflation pressures with price controls. It's had micro interventions in the agro sector. I think the case of Vicentin stands out. So I think a medical metaphor is always very apropos in Argentina. The government has a real proclivity for policy measures that only treat the symptoms, but not the underlying disease. And therefore, they only really have short-term benefits. So in the past few weeks, we have seen some signs that the government wants to move more in an orthodox direction. It relaxed the capital controls a bit. It's talking with the IMF. It's talking about greater fiscal consolidation and relying less on the central bank. But very hard to know if we're at an inflection point or if just this policies are a weather vane that always points in the direction of what the latest pressure group has wanted. And I think elections that are coming next October make it especially hard to know if an orthodox policy stance can be sustained. So that makes the outlook very, very hard to predict. and I certainly don't profess to have the crystal ball on this. There's lots of good Argentine economists who can tell you the expected evaluation or not. But safe to say, this looks to be a very volatile coming year. And as we all know, December tends to be the most volatile month in Argentina. So we can brace ourselves for that. I think the negotiations with the IMF could be a game changer for confidence. It's a very complicated negotiation, but both parties have an incentive to reach a deal. And if they do, that's great news in terms of Argentina's external liquidity and having some sort of policy roadmap. But I think, it's complicated. Argentina wants there to be no conditions. The IMF has to ask for something because it sets a bad precedent if it doesn't. But I do think there's probably some middle ground for both parties to save face. And then after Argentina gets its macro situation in order, which is a big question mark, an even greater challenge is the microeconomic challenge in the medium term. There's huge potential in Argentina, but it's a very expensive country. I think during the Macri years, that's why you didn't see that flood of investment, is because there was optimism, but people arrived and ran the numbers and didn't see it was quite clear that they could turn a profit there. So lots to talk about there, but I'll just finish on the energy sector. Instead of being a kind of a side story to Argentina's outlook, I really think this is integral, and even in the near term. In the medium term, there's huge potential, and as my panelists can explain better, there's a long road between there being potential and it being profitable to exploit it. But I think this is a very serious near-term issue. I think a few months ago, Florencia Donovan wrote in La Nación that energy could be the other coming storm. And by that, she means that, if gas production declines in Argentina, especially in the winter months, Argentina is going to have to import more gas at a time where it doesn't have many dollars. So to ensure gas to its economy, it's going to have to cut off dollars to other sectors. And that's just very inauspicious for economic growth and the recovery. So that's why I think the latest planned gas announcements are good news. It seems like the government is taking this risk seriously, and looking forward to hear what my panelists have to say about it.
No, thank you so much, Todd. Absolutely. We'll get someone else here to weigh in on devaluation. Maybe that can come up in the conversation later. Thanks for the weather vane. I'd never heard of a weather vane before with regard to fiscal policy. Excellent. Something new to keep in my toolbox, so to speak. Guido, why don't you give us, thanks again, Todd. Guido, your thoughts as you're looking at investment in country risk, et cetera.
Okay, I guess the first thing to mention is that the oil and gas industry is a global industry, and I think before we go into Argentina is understand that we are going through a transition in the sector, and it has been very tough for the sector and for the companies. When you look at how oil prices has developed over the last few years, when you see obviously the impact of the COVID-19 crisis on demand, and now the uncertainty about the timing for a recovery and the level of the recovery, and also important, you see also a lot of an energy transition where there is, investment on and diversification into low carbon fuels and alternative fuels and electrification and so on. So there is a lot of uncertainty. That has led a lot of the players to be very focused on capital allocation over the last 2 years, but that will continue. That means that capital is very scarce, and I think scarcity will mean that only the best project will make it. A lot of the players, some of them, presidents in Argentina has basically had to face reductions or elimination of dividends, asset sales, reduction of cost. Some of them are also venturing to renewals and different things. So the message is obviously constructive in the sense that a lot of the company has made the adjustment, and a lot of things will depend on what happened with oil prices. So when you go into Argentina, I think what players and the government will need to understand that for a lot of those players, investment will go into the best countries and the best projects, because capital will compete for that. That's an old rule, and that will not change. Now, to be a little bit positive, obviously, there has been there are challenges, but the restructuring and the plant gas are important steps. And I think the three messages I would like to leave are very simple. One is to continue to work into trying to bring some stability to the regulatory framework, which is very, very important. Now, obviously, this is an industry of heavy capital, and sometimes the investments will require a horizon of clarity and transparency. And I think hopefully, the rules will continue to go into that direction. The second issue, which is a little bit more on the optimistic side, although nothing could be done or will be done without putting the macro and some of the micro things in place, is that for many, many years, Argentina faced, and still we see obviously the same on the gas side, but there is a lot of potential in terms of resources, both on the oil and gas, no? Remember that the country was managed for many years for self-sufficiency, and it had to really deal with imports and different things. But when you look at a lot of the potential of the country, and you try to be optimistic, is how basically export can help the sector, no? And export will be very important for very simple things. Number one, exports could bring scale to the industry, whether it's oil and gas, and as you know, scale is very important for the sector. And the second will be access to dollars that are very important to the country and also for the industry. So those are two very important things, which will lead to a comment that says very simple. Some of the regulatory framework in the past has been more designed for a sector that has to really deal with how to get to a self-sufficiency or how to address the local consumption. And the challenge and the opportunity is how you develop a framework and you try to transition to a framework that would not only assure that there is enough supply to deal with local demand, but also more important to promote the exports, no? And that's where will come the issue to access for currency. So again, as Todd mentioned, there are a lot of things on the macro that are basically rule number one. I think nothing will come into place without having the macro in order. But now, again, some important steps, and I think want to mention again the plan for the gas that has been put in place and is being implemented as we speak. I think it's a first step, and I think the opportunity right now will be, for me, when I look what could be different is we will look 3 or 4 or 5 years, whether it's exports could basically also help, the industry. On the infrastructure, maybe my last comment is there is a lot of potential for gas. And as you know, there is going to be a lot of potential for export for gas, but we have to be also, realistic that it will take time, basically, for some of those projects and some of the infrastructure to come into place. No, so while that happens, I think we don't have to forget that there is already a lot of infrastructure for oil. So I think it's not one or the other one, it's both. But while you try to develop the gas equation and the big gas project for export, I think there is a tremendous opportunity for increasing the oil production, for which the country is already well set. So that's kind of my remarks for the moment.
No, that's perfect. And in fact, you set up our following panels today, one that looks at exactly that, using oil for recovery or the role of oil, particularly Vaca Muerta in recovery. And then the question of exports in the gas panel. And that'll be the perfect segue here. Vera de Gyarfas, who was joining us, when we were talking back, preparing for March, for the sessions in March, your entire focus was going to be on LNG and exports and where Argentina may fit in the global LNG market, what the trend lines. So, following Guido's point here, maybe some thoughts on that. But what I think would be great is if you could look at the competition for capital question, particularly from Houston and sort of the shale play in the U.S., in picking up on something Guido said about the global trend. Is there an opportunity for capital that may have otherwise been going to the U.S. shale to look to Argentina?
Absolutely. And I think that, and you said about, well, first, thank you for having me on the panel. It's a pleasure to be here. But yes, I continue to be a big fan of Argentina LNG export projects. And I do believe that there's an actual opportunity today. We're seeing that there will not be new investment in US shale in the short or medium term. We're seeing a lot of consolidation. We're seeing there's been 36 producers with 51 billion in debt have filed for bankruptcy protection. It's expected that many more will too. Chevron acquired Noble because in part of its huge shale acreage, et cetera. So we don't expect that there will be renewed investment in US shale. And that is an opportunity for Latin America in general, but specifically for Argentina. And I think that we have to look at this in the long term. So exactly 1 year ago, well, more than a year ago, November 2019, I was at a conference in Buenos Aires, and the new president had already won, right? Had not assumed power, but we knew what the election was going to turn out. And the interest in LNG export from Vaca Muerta was very much alive. And especially it was supported by the new government, especially by the province of Neuquén. And I think we really have to look at the big picture. According to the IEA, Vaca Muerta shale formation has technically recoverable resources of 308 trillion cubic feet of natural gas and 16 billion barrels of oil and condensate. It's geologically comparable to the Eagle Ford shale play in southern Texas. And only 4% has entered the development phase so far. We know that the Argentine domestic natural market is not sufficient to assure a market for the producers in Vaca Muerta to invest. And because that will supposedly be filled up as soon as there's the construction of the gas pipeline from Neuquén to Buenos Aires. But we also know that Vaca Muerta will not be developed unless there's a market for that gas. And so LNG is the key. And global demand for LNG grew 12.5% to 359 million tons in 2019. It's expected that long term, it will double to 700 million tons by 2040. And so Argentina has to look at the potential of Vaca Muerta in the long term. This is part of the energy transition. Countries are trying to focus on cleaner energy, and we know today that renewables alone cannot provide such clean, reliable energy, and natural gas is a perfect partner. As the emerging economies grow, there's going to be increased need for power and natural gas in the cleanest fuels. And we're seeing this in Asia, where the China and India demand will increase. And there's a definite change from coal to natural gas. And this will happen because environmentally coal is just not sustainable. So I think what has happened is the pandemic, the oil price, the decrease in demand, uncertainty, and when things are going back to normality has put like 2020 on hold. But that doesn't mean that the potential is still there. Of course, there's key characteristics that have to be in place and conditions, but it's definitely doable. Vaca Muerta has multiple producers and could have more. So any LNG liquefaction facility should probably be developed like a tolling structure, very similar to what we have in different projects in the US, where natural gas producers enter into long-term tolling agreements with a tolling entity. That tolling entity can be a JV among the producers or a separate third party. And with tolling contracts that contemplate a fixed capacity fee, which will be sufficient to guarantee the financing of the construction of the facilities. You know, the producers pay that fixed capacity plus the volumes that they actually liquefied, and they'll have shared facilities, et cetera. It's important to keep in mind that there's also a commoditization of the LNG market. And so long-term LNG sales and purchase agreements are much more difficult to achieve. We're seeing many more spot sales, et cetera, which allow LNG producers to steer away from long-term contracts. And so the LNG boom is going to continue. It's not something, this year has been an exceptionally bad year because we're in a pandemic situation, but in the future, the market is going to come back. And I think Argentina is very well positioned to compete with US export projects, which now will have issues with what's going to happen with gas production, given the reduction in production in the shale region as a whole. So I think that definitely Argentina is in the game, and I'm a huge fan.
Well, that's a good note to end on. Thank you. So you mentioned some key characteristics, which I think will allow Scott Monette from Hartree to jump in here. Scott, when you're looking at sort of this regional competition for capital and everything that Todd and Guido and Vera have now said, what is and where does Argentina fit, and what are some of these characteristics from your vantage?
Yeah, hi. Thank you all, and I wish also to thank the Institute for the opportunity to speak. It's always an honor to participate with the Institute and to be part of such a distinguished panel. What I would say is that I'm going to blatantly plagiarize a methodology from some very dear friends of mine when I was with Gaffney Klein and Associates. We used to have an annual evaluation or estimation of something we would call the hydrocarbon Olympics in South America, where we would, I don't want to say exactly rate the countries, but to try to give an understanding of where the countries would stack up against one another in this idea of a competition for capital. It was developed by my friend and colleague Cesar Gusetti, and also Alan Cunningham. These are the gentlemen that kind of put together this idea, and we would treat it almost like it was Olympics, with a gold medal and a silver medal and a bronze medal, and understanding how they would stack up with one another, how the countries would more or less be able to compete for capital. And I would say that that I've kind of taken that and I've expanded it a little bit, and the evaluation or the rating system that we use is kind of based upon three pillars, and I'll talk about those briefly. The first one is a resource size. I think it's been discussed earlier that there's tremendous potential. There's tremendous resource potential. Vera did a good job explaining what the resource potential for the Vaca Muerta, for instance, is. But you can also take a look at, and this was kind of easier to quantify because you can take the countries, you can understand what the reserves and resources are. At least what they're estimated to be, how much is in development, how much is being programmed for, how much is being put out, right, in the different forms of bidding rounds or concessions. We have an understanding of what the potential is and how much of that is going to be in public versus private opportunities. And then the second one is what we call like the fiscal or commercial structure, right? So not only do you have to have the resource, you also have to have a fiscal and commercial structure that will enable an operator or someone to come in and have a reliable set of fiscal models or be able to compare one versus another. The idea of government take versus contractor take, and all these different schemes and ways that you could monetize that investment. You also talk about the sophistication of the infrastructure, right? Being able to get those, to be able to commercialize, do you have the pipelines, do you have the offtake, do you have the ability to be able to do that? And then the last one is one that's a little bit newer, the third pillar, and I think it's becoming more and more prevalent and more popular today to speak of this idea of a social license to operate. And the social license to operate is kind of the amalgamation or the joining together of all of the things that were very difficult to put your finger on and to quantify in the past, but without, you're pretty much lost. As other panelists discussed, we're in the middle of an energy transition. Coal is really no longer sustainable. So the idea of transitioning out from one mechanism to another, that's being driven by something, right? It's being driven by social change. It's being driven by a demand and the will of the people to say, we just can't tolerate this anymore. And we're going to have to be, either through their elected officials or through appointed government regulators, we're seeing a shift, and we're seeing the idea of a social license to operate become more and more and more important. The interplay between those three, I feel, is what gives us an understanding, or what allows an understanding to be derived as to which countries are outperforming other countries in this competition for capital. And I'll add one other thing that I think Vera talked about, is the specific link between U.S. shale and Vaca Muerta shale. And I think this is important to understand, because it kind of gets to this part of, touches on number 2 and number 3 of how I think about the competition. I agree that there is a direct line between transitioning from investment dollars, transitioning from the U.S. shale to Argentina shale, to Vaca Muerta. But I would also say, not only is it due to resource size, but it's also because the U.S. shale market has just been pitiful, being able to return an equitable market return. They have not been able to make that transition. And this is the structure. This is the capital structure that was set up with all these LLCs, and the way that private equity generates a return. It's typically tends to be short term. So within a 3 to 5 year window, they've done a very good job in driving down that CapEx cost, right, and be able to get the cost per barrel down on a finding cost per basis, and understanding they've been able to push down the finding and development. They've been able to get that down very, very well. But the data that we've seen, especially over the past 5 to 10 years, on an operating expense, it's getting more and more expensive to produce the same barrel. This is after they've discovered it. And that means that they've done a pretty good job if you want to get in and get out in 3 to 5 years. But if you're holding one of these companies for 5 to 10 years, you're producing, your return is getting less. You're making less money. And that just won't hold. If you start talking about the idea of a social license to operate that, it even gets more constricted. So I feel that until U.S. shale gets their act together, decides to start becoming better operators, you're going to see the squeeze become more and more severe, coupled with the social license to operate that's being slowly, or I don't even want to say slow anymore, but revolt. You're going to see that capital is going to have to find other places to go. And I agree with Vera here, is that Argentina is a logical place. But on one word of caution, that would have to say that Argentina needs to learn the lessons from U.S. shale and pay attention to not just driving down the CapEx curve, but to pay attention to operations, to make sure that they can do it in a profitable manner, to be able to turn that potential into profit. I think that's something that have been spoken earlier, is that we have to turn the potential. We have to be able to make sure that we can realize profits. But by doing that, we also have to make sure that we don't cut corners in areas that start to now, trip that third leg, and that's the social license to operate. We can't be driving down the cost curve at the expense of other items, especially ideas of water resource and protection for the environment and things such as that. So as it stands right now, I'll give a quick idea of who we think the gold and the gold and medal I would think that probably Argentina and Brazil, just as they compete in soccer, I think they're probably competing for the gold and silver medals as well. At this point, due to some of the things we discussed earlier, some of the pictures in the macro trend, and some of the sovereign things we've spoken about, I think Todd and Guido did a very good job in understanding and summarizing this. I would have to give it the edge right now to Brazil. They still have tremendous resources and sub-salt. They have scale. They're sophisticated, and they have I would have to right now, I'd probably have to say that they still hold the gold medal. But I think that Argentina is very close, and if they can work out some of these others, then they may be challenging for the gold in the coming years. As for the bronze medal winners, you have quite a few companies that are probably in strict competition. I would think that Ecuador and Colombia. Colombia has a fantastic fiscal regime. They have really good government support. They have a strong, I would say a strong social license to operate as well. Same thing with Ecuador. They maybe have a little bit better on the resource side, but maybe a little bit less on the fiscal side. So those two are kind of vying for the bronze, but I think that they're being overshadowed right now. And I would have to give the bronze medal right now to the new kid on the block, the new player, Guyana. That seems that their resource size is just tremendous. They're ramping up quickly. Their government is anxious to try to find a way to do this right. And maybe I'm just enamored by the shiny new toy, but I would have to give the bronze medal to a Guyana right now.
Well, we can call this going into extra time for Argentina and Brazil, and we'll continue the panel here. We'll let Jose Luis Manzano. I've asked Jose Luis to listen to what everyone said, and then like John McLaughlin used to do in DC and his roundtable shows. Here's the answer. I've heard everyone else's answer, but here's the. So Jose Luis, thank you, Scott. What do you hear? And then we'll come back and we'll consider this like the first over to extra time, and then see if we can get a late goal from the left footer there, number 10 from Argentina. Jose Luis.
You're on mute.
You're muted, Jose Luis.
Now?
Yes.
You hear me now? Okay. I was saying that thank you for having me and congratulations for the fantastic panel. I was saying that I was all the time listening and learning, and at the same time thinking how to deal with thought intervention. And obviously, we are absolutely long in Argentina, absolutely long. Absolutely means absolutely long. So it's clear we don't follow Fitch. That's clear. And that is totally clear that we don't follow Fitch. We didn't follow Fitch to buy the Macri 100-year bonds. We don't follow Fitch today. So that's clear. First statement is that. I think the fundamentals are good. The country managed to get out of a huge default on a macro devaluation without social unrest. We solved it through an election instead of solving it in the street. So we solved it through democracy. Then we went into negotiation with a group of bondholders that was divided in 4. And at the end, the country got into a deal, and the deal reflected the voices from the market. Obviously, the aftermarket of the deal was bad. And I believe the aftermarket of the deal had to do with the negotiation dynamic and with the recession of the pandemic, and it has to do with the friction in the negotiation. So now the IMF window that I believe the country will cut the deal, and I agree with Todd on this, both parties have incentive to reach a deal, so I think it will be a deal. If we have a negotiation with less friction and in shorter time, we may get a rebound. If not, we will not have a rebound. So the dynamic in the negotiation has to do with the aftermarket. And there, I think Todd had a very good point. So I believe both sides, the IMF and the country, could have learned from the bond restructuring. It's a restructuring finished with papers, with figures, and with feelings. And the market follows figures and feelings. So you have a contract, that's enough, but it's not enough if you want to stay in the market. So you need to have a contract, and you need to have a feeling on your counterparty that you have constructed something that is a platform to go together. So I wish we all, me, the country, the IMF, everybody have learned a lesson that a good restructuring is a restructuring in which you reconstruct a feeling of cooperation. So I wish on the IMF negotiation, we get into a contract that has figures that are sustainable, but there are also shared feelings of rebuilding the economy together. That feelings will contribute to the investment climate, and the investment climate may create the situation to unlock the opportunities. When you go to Vera's intervention on LNG, that is where you really need the crystal ball. I think there is no way of predicting LNG prices. So it's very difficult to finance LNG plants. So I believe for the next 2, 3, 4, 5 years, Argentina has to think in producing gas for Brazil and Chile, start the project for an LNG plant, but if without long-term offtakes and with 13, 1400 points of country risk, it will not be financeable. It will not be financeable. Then I would like to comment on the oil and gas situation as a trade-off or as going together. And for sure, they should go together. Vaca Muerta is an oil play and it's a gas play. And in oil is competitive. In fact, in a couple of the companies we invest, we are moving to development phase with this figure because we believe the barrels can be developed at $14, $17, maybe $12, and can be produced at $8. So the relationship between OPEC cost, CAPEC cost is the key. And that's the key for learning from the US. So I think we should learn a lot of macroeconomics. We should learn a lot of market friendly. We should learn a lot of sound fiscal policy. And we should also learn a lot of micro craziness on crazy OPEC, crazy CAPEX, and financing exploration and development with high yield. Exploration and development with high yield end up in bankruptcy, end up in Chapter 11. It's not the way of doing it. I'm even less in a country with unstable macroeconomic policy. So I think Argentina, we have to make an effort to attract equity if we want to develop a Vaca Muerta. The right capital structure calls for a lot of equity. If not, we will repeat the US in an aggravated situation. It has to be mostly an equity play. One last thing is on the gold and silver. I think if you ask me, I believe we will be competing with Brazil and Guyana. Guyana has a huge barrier because it's offshore, but the geology is so attractive. And I think when Guyana is in a commercial pace, it will look like Saudi Arabia. It will look like at $7 oil. And $7, $6 OPEX will be very, very, very competitive. So for us that we are Argentina, I love my country, and we are long in Argentina. Maybe we are long for emotional reasons. Maybe Todd is totally right, but we always have reasons to be long in Argentina. My point is, you have to look around, and in a world that is moving to renewables, expensive oil has no room. Expensive LNG, expensive gas has no room. Even 2000, let's say it's 2040. 2040 fossil will take a big piece of the pie, but it's not going to be expensive oil. It's not going to be expensive gas. It's going to be cheap oil, cheap gas. So unless you see yourself producing cheap oil, cheap gas in 2040, you will be out of the picture. So I would say we have all the resources. Resources do not guarantee results.
So, okay, well, we'll give you time to think about, you said all three are vying for the gold. So we'll come back, we'll keep going in extra time here. No goal yet, or at least no golden goal. So I think to start this off, Raul, you wanted to ask sort of a kickoff follow-up, and then I'll remind everyone joining us to go ahead and post your questions in the chat and we'll start to weave those in. And by the way, Todd and Scott and Vera and Guido, if you want to, this is sort of like the debate. If you want to respond to some of what Jose Luis has put here on the table, feel free, but let's have Raul first because he has a very a directed follow-up. Raul, please.
Yes, Jeremy. I have the following question for the panel. Suppose you are Alberto Fernandez. You are the president of Argentina, and you want to go for the gold medal for the investment. So if you will have to select one thing to do and one thing not to do, what that thing would be? Understand?
Yeah, perfect. So why don't we go in order? So Todd, you want to go first, and we'll just go down the line here. So the do and do not list.
Sure. So I guess the first thing I'd say is it's always important to distinguish between country risk and sovereign risk. We have a very low credit rating for Argentina. That's the sovereign rating. It reflects the sovereign's ability to pay on its debt, including the new restructured bonds in a few years, and we see significant challenges around that. There could certainly be much better outlook in the rest of the economy. Argentina has some phenomenally managed companies, definitely in the energy sector, and they're certainly clever financial engineers. They can find way of issuing debt, even if even if they're in a jurisdiction that's high risk. So we certainly see some positive signs in that respect. What does Argentina need to do? I think for energy in every respect, it needs to establish clear rules of the game. Argentina is probably always going to be a somewhat more expensive jurisdiction for a lot of industries, but it needs to just set some rules and stick with them for more than a little while. I think Macri made some efforts in that direction, but it wasn't just that he lost the election, but even under his watch, there was confusion around the Plan Gas and Resolution 46 that I think sort of undermined the confidence in the rules of the game of the energy sector. So I think going forward to exploit that potential, that's probably one of the first things that needs to be tackled. And it's not necessarily something that happens overnight, because not only would you need to change the rules, you'd need to stick with them for a few years and then show the rest of the world that that they're there to stay.
Long-term certainty. Yeah, I think Scott alluded to that as one of his pillars for the Olympics. Okay, Guido, Credit Suisse is getting ready to put several million, if not hundreds of millions of dollars into Argentina. But you're also Alberto Fernandez. What do you do, or what? You're muted, Guido.
This is my personal opinion. Obviously, there is no an easy answer. I guess Todd already mentioned one. I have I guess 3 comments. Number one, building from one of the strengths of the country, we don't have to forget there's a long tradition of companies, a country that has been very successful with these players on the oil and gas side. Look at the players. We have some of the best companies. Not only in Argentina, but in Latin America and in the world. So it's to continue to work with those companies, with to try to come up with solution. I think Plan Gas has been an example, no? So I think the only way how you can move an agenda that makes sense, it's stable and it's for the long term, is to continue, to work closely with the key players, which are the companies. That's point number one. Point number two, it's the issue of you don't want to force things, but I guess Jose Luis mentioned something about where the world is going, and it's timing, no? It has to be a sense of urgency, because the hydrocarbons, under the ground are not worth anything, no? So I think in terms of whether it's oil, whether it's gas, with the different challenges, I think that there has to be a little bit of a sense of urgency to try to monetize those things, no? And the third, obviously, which help is just part. Obviously, you need to work work on the export side, no? Obviously, you need to move you need to move barrels up to the ground for local consumption, but also for export. And part of the issue how you achieve scale, and particularly on oil, which is readily available, is the dilute cost, and that doesn't happen unless you go into big quantities, no? And that is obviously I'm not going to go into details, but you always have issues in terms of how, whether it's, certainty of pricing, low or no withholding or retenciones, or reimbursement of some taxes, or obviously benefits for the companies that will invest. I mean, there's always ways to basically to promote that, which always at the end of the day will lead to the access to dollars for the country and for the companies.
No, I think I remember our everyone probably knows Decio Odone or has heard of Decio Odone. And to your point, Guido, about this urgency, I remember Decio when he was running AMP, probably at La Jolla conference, talking about he was very eager to because they had paused auctions in Brazil, and just this need to recover the auction process. And really, exactly to your point, the more that they delay, the longer they would get to that quote unquote stranded asset kind of discussion. So excellent. Yeah, I think well, let's say Vera, over to you, and then we'll get to one of the questions here from the audience as well.
So I think that there's an amazing opportunity right now. It's been announced that Argentina is going to enact a hydrocarbons law or a hydrocarbons package. I think this would be the perfect opportunity. And going back to the LNG exports project, what is needed for a successful export project is host government support. And what does that mean? That means, again, what Todd mentioned, to have clear, certain rules in the long term. And we know that unfortunately Argentina has had an issue with this, but I think this is the time now to actually, enact a legislation that somehow extracts the oil and gas industry from the general other economic turmoils, because that is, Argentina needs to understand that is a key for its development. And if it somehow can isolate it, maintaining, and I would address a special fiscal regime, I would include stabilization rules, I would include exchange control, the elimination of any exchange control restrictions, to make sure that the people that will invest in Vaca Muerta, both in oil and in gas, know what the conditions are and that they will be long-term. And you have to have stabilization provisions, because of Argentina's precedent and the fact that it has changed legislation in the past, then there needs to be a compensation mechanism to make sure that the companies will be made whole. So I think it's a good time to push for that sort of legislation, because I think it would be a boost both for the oil production and also for the gas production in the future. And I agree with Jose Luis that right now the timing is not appropriate for the LNG export project, but I think that it has to be a long-term strategic decision of the Argentinian government.
Jeremy, may I have 1 second?
Of course, sure, one.
Yes,
okay.
I think that here, Todd, Guido, and Vera, the things they put together, I would think is a very good recipe, which is, you say, stable rules in which you contemplate stability on the norms, but also incentive for the investors, and then the tool. The tool has to be a law. It has to be a law. It's not enough with resolutions and decrees. It has to be a law, and the law has to go through Congress with a big consensus. It has to be bipartisan, so it has to be a law that projects its glide beyond 2 or 3 or 4 presidencies. Mm-hmm. With that, you can construct a competent oil and gas industry that can deal with declining prices. You need that stability, you need incentive, and you need long-term projection. And since the resources, the geology is very generous, you may be one of the survivors on a horizon of low prices for oil and gas. So I think it's a very good recipe or a very good suggestion for the government. And obviously, you need to be connected to the capital. And for that, you have to be at peace, in peace with Wall Street, with the strategic investor from Asia, and with the IMF. Oh, those are the conditions. It's like to have babies. It's a lot of conditions. It's a lot of things. It's not only one.
Okay, so along with weather vane, now conception is an idea that's been put on the table. Scott, it's the end of extra time. Has Argentina been able to get the gold? And then following up on Raul's question here too.
You know, I would say that that all of the elements are there. And to try to maybe, you know, tie up a few things, I think what's really needed, especially to try to just kind of piggyback on what Vera was saying, I think what is really needed is leadership, right? Right now, in this element, in this time where we're transitioning, and I would even say that COVID has, it's been a hold button, but I would almost even say it's been a reset button. It's given everyone a chance to try to take, hopefully, at least the extractives industry should be taking a collective deep breath and trying to understand where they need to go. Because right now, the world is searching for a solution to the energy transition and how we're going to keep, you know, the lights turned on and keep the developing world developing and then transitioning to a low carbon future. And what we need right now are leaders.
Managing climate. Yeah.
Exactly. What we need right now are leaders. And I think that Argentina has an opportunity to become one of those leaders. It has a world-class resource in the Vaca Muerta. It has an educated workforce. It has the potential to get its fiscal house in order. It has right now it has the will of the people. It has that social license to operate. The outgoing and incoming president administrations understand the need for the oil and gas industry, for the extractives industries to be supportive for the national objectives. And as Jose Luis was saying, you know, this needs to go through proper formal channels through the Congress. These need to be laws that are enacted. They need to be comprehensive. They need to get these things in order, and they need to show leadership within the context of doing this in a climate neutral way. I think putting that all in context together, as Jose Luis said, is that, you know, competing against $7 oil is going to be really, really, really hard. Yeah. Competing against $7 oil when you're going to be carbon neutral is going to be super, super hard. So we have to find a way to get that now, and that's going to take leadership. But if that can be done, then yes, I absolutely think that the left foot of a number 10 can get us a golden goal. Right now, I'd be happy with the hand of God as well, but I'd prefer.
Yes, rest in peace. Rest in peace.
Exactly. Rest in peace.
Thank you, Scott. So let's we're amazing somehow how fast time goes by. We're already heading toward the end of the discussion here, but thank you all. Let me weave in a question from our friend and colleague John Padilla. And I guess let me start. We'll just sort of go in reverse order, Jose Luis, and then I'll open it up anyone else who wants to jump in. Without access to international markets, what kind of oil and gas production can we expect over a 1 to 5 year time frame? And then a tangent to that, but what about with access? So sort of a question on a crystal ball, and if you foresee access to international markets for oil and gas production, what's sort of your expectation? Start with you, Jose Luis.
Well, it's easy to predict based in examples. You got in Venezuela, even before the sanctions, they went down from 3 million to 1.5 million. So you lost 1.5 million barrels a day through the wrong policies. Mm-hmm. So Argentina should not even consider being out of the international capital markets. Without being connected and following the rules, the industry will not survive. So I wouldn't consider a scenario of self-sufficiency without foreign financing. YPF needs the market, Pan American needs the market, Total feels their treasury with the market. Small guys like us need the market, juniors need the market. So without market, there is no Vaca Muerta.
Okay, excellent. No, that's a very direct. Guido, let's get your thoughts, and then Vera, Scott, and Todd as well.
No, the same. I think, you know, when you look at the oil and gas industry, like many other industries, is capital intensive. So clearly you need capital, you need long-term capital, and you need obviously long-term capital, which allow you to basically survive in an environment most likely of low prices. So definitely you cannot do it without that. No.
Thanks, Vera.
I agree. I don't think that there's a lot more to add there. I agree absolutely with the fact that if there's no foreign capital, the production is going to be just simply reduced, and the importance of Argentina in the world market was just be, null. I think that there's no option, period.
No, like no scenario, as Jose Luis said. Yeah. Scott, what do you think? Just quickly, and Todd as well.
So I'll take a quick stab at it, and if you want to understand what the actual numbers can be, I'm an economist, and so I'm always up to putting it into a spreadsheet and see what I can find. We'll just find out what the companies can do, and there's my dog. That's the way it goes.
Your dog.
Hold on 1 second. Yes.
Well, we'll go over to Todd here. Yeah.
Hold on a sec.
Yeah, sure. I guess contrasting my pessimistic earlier remarks with something more optimistic to highlight what something Vera said. Yes, financing is absolutely essential for production, but there's a lot of ways that the energy sector can be sort of extracted from the broader Argentine risk in terms of certain financial structures, in terms of companies having a lot of assets overseas. That's already the case, in terms of special labor regimes, special fiscal regimes. So I think there's a lot of potential to attract that capital, even if the sovereign is a ways away from really getting its house in order. And I guess that's one of the reasons we also only upgraded Argentina to CCC, but we did put the country ceiling at B-. That means that Argentine corporations can be rated higher, and maybe we'll have better access. And to be perfectly honest, I think a lot of potential lenders to Argentina don't really care about our rating, and they're doing a lot of their own great credit analysis themselves and see a lot of, could potentially see a lot of a great case to be lending to Argentina. And that's the debt side. I think the more of a equity capital goes back to what we said earlier about much clearer rules of the game. And I don't have a dog, but I live on a busy street in New York. Sorry for the sirens.
No.
Hey, this
No
is
problem at all. That
2020.
was just as someone was walking on the street. So no,
No
what I was
problem.
going to say is that if you want to be able to calculate it, you just have to take a look at what companies, what they can do to fund a capex problem if they have to live within cash flow.
Yeah.
Right. So if you want an example of that, we'll then kind of look at what's going to happen with U.S. shale right now, because they're being constrained to live within cash flow and being denied capital markets. So when that happens, we'll just take a look at probably tier 2 Permian operators to see what happens and how quickly they start consolidating and folding, because you can't fund the type of capex projects you need if you're operating out of cash flow. You can barely keep up with your ducts. You can barely keep up with OPEX, just to keep things going. So there is a way to be able to find out how to do it. There is a way to, but it's very, very painful. And not to say that what you have to do is start feeding, start to, feed the cow or, feed the bear, whatever animal you're talking about. And here I would probably agree with Jose Luis, is that I would say instead of feeding the debt side, you need to put it on the equity side, right? That's going to entail a stronger capital discipline required in order to see these transition to more longer term investments, to where shareholders demand a rate of return equitable to the risk, to the specific and systemic risk that's being shown in the industry. And they can make comparative planning decisions. And so I think it's possible that if you're out of the capital markets, it's going to be hard.
Yeah, I think that's consensus. Well, we're out of time, but I need to wrap up and give you all the chance. I won't do the yes or no question that I always like to do, because people have now told me that they don't like being put on the spot that way, and they never just answer yes or no anyway. So let's do this. We're going into 2021. As we've talked about, Plan Gas is underway. There's the subasta that's happening. We'll have results very, very soon. So as a wrap up to everything we talked about, why don't we have each of you give your 1-sentence synopsis, but relevant to Plan Gas. Are you optimistic? And again, it's not yes or no, but synopsis. Optimistic about what Plan Gas will do, and then will that lead to further policy developments? Todd?
Sure, I'll admit I haven't looked in detail about the new Plan Gas, but I think it's a great sign. Like I said earlier, any sort of gas shortage in Argentina could really be devastating for the macroeconomic outlook. It ties up already scarce dollars. I think the government seems to realize this risk and is taking Plan Gas seriously. It comes with a fiscal cost, but it does seem like the government knows that it has to make adjustments in other areas to fund that. There's sort of a subtle adjustment in pensions and some other items going on that, you know, I'm sure the government is not eager to brag about, but it does seem to be opening up some space for important microeconomic measures like this for Plan Gas that are, you know, hugely consequential for the near-term outlook and for the long term.
Okay, we got one in the optimistic camp. Guido. Thanks, Todd.
Not having gas or not having enough gas could be more expensive at the end of the day. So definitely it's a step on the right direction. And I'm sure there's going to be issues on implementation that could be worked out, obviously, among all the parties. But definitely it's a positive move, a positive step.
Thank you. Another optimist, at least with the Plan Gas tool. Okay, Vera.
So I think it's also a step in the right direction. I don't think it's sufficient. I think it still creates uncertainty, and I think that in the long term, it's not going to be sustainable. So it's kind of like, I think it was Todd that said it's you know, treating the symptoms without going back and actually making a change to make things work for the future in the long term. So I think you do need that legislation, and like Jose Luis says, bipartisan legislation in the long term. It's a good step. We're glad it's being done. It's better than nothing, but it's not sufficient.
I would call that yes, but. Okay, sounds great. Thank you, Vera. Scott?
Yeah, actually, Vera totally stole my fire there. I was gonna say it's a step in the positive direction, but it's just not comprehensive enough. It just needs more detail on it. It needs to have stronger support. It needs to have congressional support. It's a Band-Aid, and maybe it needs a little bit, well, not a little bit, it needs a little bit, it just needs more. I would like to see more.
Okay, so another yes, but, and we'll take all of this for our panels later today and see. This will be great, great setup, scene setting here. All right, Jose Luis, I don't want to say this, but I will. You get the last word.
No, I don't want to have the last word, but I think it's in the right direction. Everybody agree on that. I wish it's the base for legislation, and I believe legislation should be comprehensive for oil and gas and need to have strong congressional support, both sides of the alley.
I think that's the perfect place to leave it. That's a great segue for our panels coming up. We'll take a 15-minute break, but first, virtual applause. Wonderful. Todd Martinez, Fitch Ratings, Scott Monette from Hartree Partners, Vera de Brito from Meyer Brown, Guido Cerini from Credit Suisse, and Jose Luis Manzano from the Institute of the Americas board, but also something called Integra Capital, I think is your day job. So thank you all very much.
Thank you very much. 15-minute
break, and we'll resume. Imagine this, we're going to discuss Vaca Muerta and the role of oil in the recovery with a great panel, including YPF, Pan American Energy, and Sproul, as well as Chevron. It's our steering committee panel. So see you all in 15 minutes. Thanks again.
Thank you.
Pleasure.
Bye.
Great to see you all.
Thank you.
It's an honor. Thank you, Jeremy.
Thank you.